Okay, please go ahead, Thierry.
Okay, perfect. So I wanted to make a presentation firstly about Luxembourg, a bit about MAPRIMA, and then different solutions that are existing in Luxembourg, and also to present a specific case that we have linked to the MENA group and to the Islamic finance that is also often used in Luxembourg. So let's go further. So where is Luxembourg? I would say mainly all the people here knows where we are located. Small country, but quite well known. And then we see also what is Luxembourg and why Luxembourg is often used by a lot of international companies, clients, asset managers for entering the European market or structuring through Luxembourg. So we are near between Belgium and France and Germany, and we have indeed a lot of cross-border workers coming from these three countries, but not only. We have a lot of international workforce in Luxembourg. So Luxembourg is one, please. This one, okay. So we are a European country, like you know, small country, roughly the size of Long Island or even Dubai, and not so many inhabitants. It's only 650,000 for the moment. They expect a bit growth in the future, but we have not enough place to get all the people living in Luxembourg. So a big part of the task force is living in France, Germany, and Belgium. So we are part of the Blue Banana, and we are certainly known as the global financial center mainly. Indeed, there is an industry in Luxembourg, but due to the small country and also a lot of countryside, and they want to keep forest. It's mainly known for Luxembourg City with its financial centers, where we have almost 123 banks coming from 26 different countries. China has also, I think, 6 or 7 banks in Luxembourg now. We also developed the Islamic Fund Center, so we have different solutions, fund, but also alternative solution. And yes, Luxembourg is in the EU known as the first Islamic centers and the 6th in the world. The rating of Luxembourg has always been AAA, and our public debt is quite low. Increased, we were at 20%. Now, due to the COVID crisis, we are 25%. It is indeed a multicultural country because yes, local people were not enough to respond to the requirement in task force. So a lot of foreigners are coming to Luxembourg, and we have indeed roughly 170 nationalities. We are indeed a founding member of the EU. Originally, Benelux was also Belgium, Netherlands, and Luxembourg. I would say the founders of the idea of the European Union. And we have also top major indexes in terms of corruption rates and also ease of doing business well done in Luxembourg. Indeed, we've seen that Luxembourg is the gateway to Europe, due firstly because there are people there to work for. The financial system is well developed in different solutions. The legal and corporate system is well developed also and safe. And the tax and regulatory framework is not changing every year like in other countries. So there is stability in this perspective, and the government is also really following the market and the trends to respond quite rapidly to the situation. We have also, being middle of Western Europe, a good infrastructure in terms of airport, train, and trucks, the railway and motorways to join us. And most importantly, I would say that Luxembourg has always been international oriented. So we have experience and an open-minded approach to international business, government, but also workforce companies located in Luxembourg. Just one or two small words about MAPRIMA. So we are certainly Benelux located. So we founded in 99, starting in the Netherlands. So with a license from a Dutch National Bank, then opening an office in 2005 in Belgium to respond to certain requests from international clients using at that time the notional interest system used in Belgium. Now it's quite reducing the activity in Belgium. And we are open together with the partners of MAPRIMA Netherlands, the Luxembourg office in 2012. So we are licensed by the OEC, it's equivalent of chartered accountant. So we are not licensed by the CSSF, which is the controlling body of the financial sector. We have almost 30 employees located mainly Netherlands and Luxembourg, and with 4 partners directly involved in the management and the activities of the company. And people are, yes, our staff is mainly yes, experienced, but also some juniors, some coming from Big Fours or the accounting in international tax law. That's it for MAPRIMA. So today I wanted to just to present quickly some structures that are often used in Luxembourg, and mainly we are known for the just going back to the legal aspects of what is Luxembourg. The different type of structures we have is just for general information, but we have the classical limited companies, private or public limited. We have also the partnership and the cooperative solutions. And you see quite recently, they developed really well the SCSP, which is the limited partnership to compete with the UK LLC. Luxembourg is mainly known for, yes, the SOPARFID, so it's the so-called in Luxembourg Société de Participation Financière, coming from French. But it's really the holding and financing company, which is used by a lot of countries and well known. But indeed, I wanted to present it because we see that it's one of the big aspects in the corporate services we have in Luxembourg, used by high net worth individuals, entrepreneurs, a lot of private equity players when they have to acquire their targets are using multiple layers of holdings in Luxembourg. I will present briefly also the SPF, which it's a private wealth management company used by high net worth individuals for asset protections mainly, because it's not taxed, but it's sometimes excluded from tax treaties. But it's a good tool for some individuals. I will present also the alternative investment funds, which are quite developing now in Luxembourg, the regulated ones and the unregulated ones. And finally, I will go to the Islamic finance case that I have to present. So tax aspects, yes, aggregate deadlines, corporate tax rates. We have different taxes, but it's going mainly from 22 to 26%, mainly for trading activities. When you come to holding, you are generally exonerated or exempt due to the participation exemption regime that we'll see a bit later. We have a minimum wealth tax, unfortunately, starting from 535 euros. But if you have quite an important or a total balance sheet above the 350,000, it could reach 4,800 per year, which is quite not so good comparing to other countries which do not have such a minimum tax. Then coming to the domestic, especially the Luxembourg is often used thanks to the treaties, but also to the fact that we do not have retain always withholding taxes on royalties, on interest, and we can have reduced withholding tax when distributing a dividend, depending on the shareholder. We have domestic rate, it's 15%, but often we can use the treaties with 0% or the EU parent subsidiary directive. And also when there is a liquidation proceed, we do not levy withholding tax on it, which is also quite interesting in certain cases. So coming to firstly the SOPARFID, also the holding regime. So we can also perform financing activities. We see a lot of when private equity players are using the structures. Firstly, they acquire the shares, but also they finance the target companies with through the holding. We can benefit of the participation exemption regime, which I mentioned before. There is also team cap requirements that should be in line with the ATAD. Previously it was different, but now with ATAD we have to comply with certain team cap requirements, and require sometimes also a transfer pricing analysis. But like ATAD is mentioning it or fixing it, if you are below the 3 million euro, it's exempted. So you do not have to respect these team cap requirements. We have indeed qualifying participation exemptions that's applicable, and also for the net worth tax. So generally, when we saw the type of structures, Luxembourg has good connections or a lot of treaties, double tax treaties. That is why it's used, because sometimes you come in a situation where you have a parent company holding the operational company, and there is no treaty between the two countries, and then perhaps you have some difficulties in repatriating the dividends. That's why generally we use the holding regime, Luxembourg, but also other countries, depending on the treaties, the countries you are working with, and then we can see that putting the Lux company between the parent company and the operational company could decrease quite sometimes up to 25% withholding tax, which is sometimes really interesting for private equity players. Indeed, you have to respect how you structure your company and you finance or you deal with the shareholders, because sometimes if you are not in a treaty between Luxembourg company and Luxco and parent company, you need to have some instrument, but that should be BEPS compliant indeed. I don't know if you are a question about the holdings regime, but I think most of you know this regime. Then I can come to the private wealth structure, which is often used by in high net worth individuals to protect their asset instead of holding directly their security, the stock listed shares, or even real estate or bonds, cash to protect themselves. They use the SPF, which is a private wealth management company used by individuals and exempt from corporate income tax and wealth tax. Generally, the SPF cannot benefit from tax treaties because it's there is no tax on the level of the company, so it's excluded generally from the treaties. Shareholders must be individuals, or you should put a kind of fund or foundation or trust or stiftung above. You could not put a normal corporate solution above the SPF. It's really dedicated to individuals. And you have an annual stamp duty of 0.5% on the paid up capital per year. So generally, it's a private person or trust holding the Lux SPF to own the savings account, portfolio investments, and shares in real estate company. Depending on where the private individual is located, sometimes some countries, generally European countries like France, Belgium, have put some anti-abuse rules and that avoid the use of the SPF or make it more difficult. But I would say for many other countries in the world, it could be quite interesting for some clients, high net worth individuals, really to protect their assets and manage their portfolio. Then we come to the unregulated investment fund solutions. So we see also that Luxembourg is often used by individuals to manage or to attract investors and to use a vehicle to keep the control of the structure, the SPV, but they have a lot of contacts and investors willing to put money and they want to manage it. So they can use it through the alternative investment funds, which are transparent. So what we call the AIF. So investments are any vehicles, to corporate bodies, partnership, mutual funds that collect funds from investors. So we see often the SCSP in Luxembourg, which is tax transparent. We can also use the SCA, which is not transparent, is Société en commandite par action. So it's really with shares and not transparent. But generally, we see the SCSP, and then it's taxed at the level of the investors. The advantage of this solution is that it's a very short time to market, since they can launch without any authorizations. It's not regulated. So from any financial supervisory authority, and the running costs are also lower than regulated funds. So we generally see we have to still register the management, so the alternative management with the CSSF, or the AAD is the VAT authority in Luxembourg. Where we have, for AML reasons, now to register the company and make an annual report for our AML rules and what has been happened during the year. But we do not have to register the fund itself. So just a quick presentation how it's generally structured. So you have the GP, who's also alternative investment fund manager, who's keeping the control on the partnership. And you have the investors putting money, and through an SPV, we acquire the targets or the investments, portfolio, bonds, operational companies, any possibilities. And this is a good tool for the GP to keep the control on the investments and the strategy of the fund. Then we come to the regulated ones, which will be a bit more expensive indeed than the first one, because it's regulated. We have, I would say, mainly two solutions in Luxembourg. It's the CIF and the SICAR funds. Both should require the authorizations from the CSSF. So it's the Luxembourg Financial Service Authority for the financial sector. Currently, it takes a lot of time to get the authorizations from the CSSF. In the beginning, it was quite short. In 3 months, you couldn't get it, but now it's between 6 months or 1 year, without the uncertainty to get it. And also the costs are quite important, but we still see some. But the CIF has mainly been replaced by the RIFE now. So it's the registered alternative investment funds, because it's the fund itself do not require the authorizations from the CSSF, but they should have a management company, a MANCO, and it's the MANCO who should be registered. But it's not compulsory to have the MANCO, the management company, registered in Luxembourg. If you have a MANCO that is registered in a country agreed and accepted, like Cyprus or any other countries where they have also a fund industry and a regulated fund industry, and the MANCO located in this country is controlled, could be the management company of Luxembourg RIFE. And the RIFE indeed is a bit more expensive than the unregulated ones, because it requires firstly the depository bank, transfer agent, and a central admin regulated, but there is not this disadvantage of waiting for 1 year to the authorizations of the CSSF. So it could be directly launched. It seems the same as.
Excuse me, Thierry.
Yes.
Maybe 5 more minutes.
Okay.
More? Yeah. Thank you.
5 more minutes. Okay. Yeah, absolutely. It's the last part. I will come to the fund, to the Islamic solution. Okay. So you hear the presentation about it's clearly the same. So except that you should get a MANCO for the RIFE, and the CIF should be regulated by the CSSF. Then, if I have 5 minutes, I will directly go to the solution we have seen here quite recently in one of our clients. So we had the Islamic bank willing to invest and governed by the Sharia law, and to make some investment within a Sharia compliance setup, we had to put a structure in place where we incorporate a Luxembourg company, which is held by we need an orphan solution because it should not be linked to the bank itself. So how to do that? We put a stichting, an orphan foundation in the Netherlands, who's the shareholder of the Luxembourg company. I will show you the structure chart just afterwards. And it will be the Luxembourg company who will enter with Murabaha agreements with a subsidiary of the Islamic bank. So based on Sharia law, several assets classes are not allowed, such as forbidden production, alcohol, gambling, pigs, and gold. Speculative investments, such as it invests with abnormally high risk, are also forbidden. And loan charging and interest are also forbidden. So the Murabaha agreement is basically a financing contract for tangible goods without interest. Based upon such agreement, Sharia compliance assets are traded at a pre-agreed margin. I will show you a bit further how. And the margin represents the bank's remuneration. I will perhaps go firstly directly to the structure chart so that you see a bit more how it is structured. So you have the Luxembourg company with a shareholder is a stichting in the Netherlands, an orphan foundation, and then you have also the on the left side above the Islamic bank putting in place some different vehicles in order to finance this, and it's the XYZ Fine LLC who will enter with a Murabaha agreement with the Luxembourg company. And I will show you a bit further how to deal this. And so the Murabaha agreement between the LLC is the agent, and we have the subsidiary XYZ Fin has the seller, and Luxco the purchaser is set up as follows. So the Fin company LLC XYZ Fin buys Sharia compliant products. Let's say I would say some aluminium from an external party. For example, the 100 euro, but you should multiply it by millions, but indeed to get the financing solution. Then the company Fin LLC sells the aluminium to Luxco for 100 plus the margin. In this example, it's for 40 euros, so a 40% margin. And the selling price and margin remain indebted, generally during 10 years. So the Luxco will buy the aluminium from Fin, but doesn't have to pay directly, only in 10 years. And the assets received by the Luxco, so the aluminium, is sold to a third party for the same market value as when it has been bought by Fin LLC. So the market when in day one, the market for the aluminium is 100. So Luxembourg bought it for 140 from Fin, but sell it for at 100 to the third party. So when looking at this, indeed, the Luxembourg company is normally realizing a loss because it's selling at 100 and buying at 140, but doesn't have to pay the 140 directly. So when selling the assets, they receive the cash, the 100, and with the 100 received, they invest it in a private equity or venture capital solution, where this venture capital solution will also, with this money, invest it on targets or make some leverage for target parties. We'll see here a little bit further, you see. So Luxco, when receiving the 100, they will become a limited partner of a private equity player on the market, which itself will invest the money And during the 10 years, the revenue will come to Luxco to cover the 40 euro of margin. I don't know if it's clear or not. Clearly, the idea is to just not to get for the Islamic bank interest, because they are not allowed, and they receive directly a margin, but that is not paid directly.
Can I ask a question here, Thierry?
Yes.
So the 40 euro margin that the company got, that's almost like 40% profit
Yes.
on the transaction.
Mhm.
Was this so as per Sharia law, you would need like a authorized person or a sheikh to sort of like sign off on this deal, correct?
Yes, indeed.
This 40% markup, was it a matter of concern that he pointed out, or he was completely okay with it? I'm just wondering because in comparison, 40% is a big margin. So is there like a limit?
Yes, but it's
acceptable, or
yes, but you should 40% is indeed a big margin, but the contract is based on a 10 years basis, so you don't have to pay the 140 directly. So if you have 10 years to, if you put it back to the 1 year revenue or yield, it's only 4%.
It is a compound interest for 10 years. Yes.
Yes, that's it. So, and because you don't have to pay the 100, so you buy the aluminium for 140, but multiple in terms of tons, but you don't have to pay it. You only have to pay the 140 after 10 years. But when you sell directly the aluminium, you don't keep it for 100, and the cash you receive from selling the aluminium directly, you invest it through a private or a venture capital or private equity player to get a revenue every year that should normally at the end compensate the 40% of margin loss realized by the Luxco.
Thierry, may I pose a question?
Yes.
The first one is, you mentioned that there are alternative investment fund and regulated ones.
Yes.
The difference is because for certain types, it is mandatory to have a regulated one, or what is the reason for having the two?
I would say, firstly, if people have the choice, they choose for not regulated because it's cheaper. They have still the advantage. But due to the directive, the European directive on alternative investments, if you reach some threshold like 100 million or 500 million, you need to go for regulated solutions because you are considered to be a fund. So in the past, SIF were often used because in the beginning they were easier to get the authorization from the CSSF. But from time to time, now it becomes so much delay to get the license, and even not the license, that they put in place the HIVE, which is a reserved alternative investments, where the fund is not requiring an authorization, but you need to have a management company, and it's the management company who is regulated, and it's the responsibility of the management company that the fund is complying with the rules.
Okay, thank you. And the second question is about the Islamic scheme.
Yes.
It was mentioned that at the end, there is no, let's say, there's no remedy if upon the deadline, the debtor is not paying.
Mm-hmm.
What happens in terms of what we call moratory interest rate? So when you don't perform, you get charged a higher interest rate. Under this scheme, what is the remedy to achieve more or less the same result?
So if I understand you correctly, if you do not reach the 40%.
No, maybe you come, I see it like a zero coupon, okay?
Mm-hmm.
So that at the end of 10 years, you have to pay 140, okay? In case the debtor is not able to pay 140, what is the remedy in terms of compensation for the later or payment in theory?
Normally, it's fixed in the agreements. It's the last bullet here because it has been put in place by the.
It's not an interest, but it's a penalty, something like that.
No, usually no action can be taken against a defaulting party, apart in case of willful default. So the contract is put in place in such a way that if you do not reach the 30% or the 40 and only 30, for example, you should only pay 30. But I can double check with the lawyer
I see.
this fact, but if I remember well, I asked this question, and there is no action to be taken if you do not reach. But generally, it's not really, except if, like you mentioned, in case that there is a default party that saw the final target company could not reimburse or pay the loan or the interest, and then the Luxco is in a position where they could not reimburse and pay the XYZ fin. Then indeed it should be checked in the contract how it's covered. But apparently it's not. They could not suit the Luxco.
And in terms of warranties or guarantees, let's say guarantees, how is the investor secure in some way, or what are the possible ways to be guaranteed about the investment, if any?
I don't think there are.
I see.
But I will note these two questions to be checked to be sure that in the contract, the Mohaba contract agreement, how it is covered.
But probably there should be some ways.
Yes, indeed.
Okay, thank you, Thierry.
No, you're welcome.
If you're done, Thierry, and nobody has any more questions, I'm going to stop recording.
Okay, then I stop sharing.
Okay. Thank you very much. Great job.
Thank you.
Thank you.